The top business stories live from the Sky News City studio. Up to 3,000 jobs in South Wales at risk, with steelmaker TARTA set to close its 2 blast furnaces at Port Talbot. Samsung claims it's making smartphones even smarter using AI. I'll be speaking to the company. Plus, high street lenders are seeing increasing numbers of defaults and believe things are likely to get worse in 2024. Good afternoon, this is Business Live with me, Ian King. We begin this afternoon with news concerning the UK's ailing steel industry. More than 3,000 jobs are at risk at the TARTA Steel plant at Port Talbot in South Wales. As Sky News understands, the company could close its 2 blast furnaces at the site. An announcement around the closure and the future of the workforce is not likely today, but is expected perhaps as early as tomorrow. Unions have been meeting the company today, putting forward alternative proposals aimed at saving jobs at the plant. In September, TARTA Steel confirmed that it had secured £500 million from taxpayers to support Port Talbot in a move to cheaper, greener steel production. Today, sources confirm the steel giant is to press ahead, though, with plans to close its 2 blast furnaces in the South Wales town. The redundancies to be completed by March next year will see 3/4 of the 4,000 staff on site at risk of losing their jobs. That is according to the Press Association. The workforce currently accounts for 12% of the coastal town's entire population. Well, the UK government spokesperson said we are determined to secure a sustainable and competitive future for the UK steel sector, which is why we've committed £500 million worth of UK government support that will transform the site and protect thousands of jobs, both in Port Talbot and throughout the supply chain. Engagement with trade unions is rightly a company-led process. There is a broad range of support for staff affected, including a dedicated transition board backed by £80 million worth of funding from the UK government and £20 million from TARTA Steel. Chaired by the Welsh Secretary with ministerial representation from the Welsh Government, the board will support both affected employees and the local economy. Well, the steelworks sit within the shadow Immigration Minister Stephen Kinnock's constituency. He says TARTA needs to reconsider its plans and engage with the unions.
It would be utterly devastating. The steelworks is the beating heart of the community and of the economy, not just in Port Talbot, but right across South Wales, the rest of Wales, indeed the United Kingdom. It's the lifeblood of so many of the different parts of our life, from the cars that we drive, the buildings that we work in, the trains that we travel on, even the cutlery that we use to eat our meals with. So it would be utterly devastating. There isn't a single household in my Aberavon constituency that isn't connected to the steelworks in some way, and I would therefore urge TARTA Steel to sit down and listen very carefully to what the multi-union are saying to them, so that we can have a plan which, yes, embraces change, but embraces change in a way that is sustainable for the future of our community and for our economy.
We'll have more on that story throughout the evening here on Sky News. Now, last year was a disappointing one for the global smartphone market. While almost 1.2 billion smartphones were sold around the world, that was the lowest for a decade and down by nearly 4% on 2022. Well, now Samsung, which was the world's top smartphone maker for 12 years before it was overtaken last year by Apple, is hoping artificial intelligence can give the sector a lift. Today, it launched the Galaxy S24 series, which incorporates generative AI technology and which it claims will change the way that people use their phones. Well, here with me now is the Vice President of the MX division at Samsung, James Kitto. James, good to see you. In what ways do you anticipate AI enhancing the user experience?
Well, we're bringing AI to mobile for the very first time. We believe that the mobile phone is the best way for consumers to access AI technologies. We've seen a large growth in AI technology, of course, in the last year, but we're really excited to bring tangible, real benefits to our customers. So under what we're calling Galaxy AI, we've got onboard AI as well as cloud-based AI that allow you to be creative in new ways, improve your photography output, exponentially through augmented AI functions that improve the quality of your zoom output or help you really improve the quality of photography. For example, fine-tuning your pictures, editing your photos, and creating that perfect shot to share.
There's no AI functionality in any of your existing phones?
There's elements, small bits, but really this is the first time we brought proper AI onto the device. So we've got onboard AI, and particularly the onboard AI allows you to do things like call translation. For the first time ever, you can make a live call to anybody in the world, no matter what language they speak, and we support 13 languages from launch. And whilst you speak in English, they will hear their language. They will speak in their language back to you, and you will hear that translated into English, all in real time, all just over a voice call. And you can ring them on. You can ring them on any phone. They could be on a landline. You don't need any connectivity for that. That is happening all on the device.
Now, this incorporates Gemini, which is Google's large language model. Is there any of your own AI intellectual property in there as well?
Yeah, absolutely. So Samsung recently announced its own Samsung Gao's large language model and foundation model in the AI space. Actually, all of the translation features I mentioned, that uses Samsung's own technology on device. And then we're using best-of-breed third-party AI, including, as you mentioned, Google services, the Gemini solution from Google. And we'll continue to build on those third-party partnerships. We have a very open and collaborative approach to AI, because quite frankly, no one company can do this on their own. This is about bringing the very best of the market together and putting it in a package that makes it accessible to our billions of customers worldwide using Galaxy.
But is that collaborative approach going to succeed longer term? I mean, Google's own Pixel 8 phone claims to incorporate Gemini as well. I mean, can you both collaborate and compete with them at the same time?
I think so. As we've seen, it's a very, very large market. Samsung has huge ambitions in this space. We continue to lead with innovations. We've spoken before about foldable devices in the market and how we've led the charge there. And this is the first time at scale you've got a major manufacturer, and that's Samsung, bringing mobile AI to the masses. And we start with the Galaxy S24 range, and of course, we'll expand thereafter.
Do you think this of itself is going to be enough to speed up the replacement cycle, get people to change their phone if they don't necessarily have to?
Well, I think we have a very loyal base in the UK market. There's actually about 23 million customers using Galaxy. Many of those are using their phones and have got phones that are normally now about 3 years old before they start to replace. And we're happy to support that. We're also very committed to our sustainability goals. In fact, this year round, we've announced 7 years of support for new OSs, as well as security updates. So we recognise people want to use their phones for longer. But we also recognise people are looking for more and more premium devices because they want that experience. They want the very best experience that only their mobile phone can give them. And of course, it's such a valuable companion now. We all have one in our pocket, and we're relying on it to do so much more, whether it's for work or play or communication.
Well, you mentioned it's a premium product. How much is one of these going to set me back?
Well, the good news is that this year's device starts at $799. That is actually a price reduction versus the same model, the S23 model last year. So whilst we recognise there's a cost of living crisis out there, we're doing what we can to bring down the entry price to this technology. Also, we see big trends in people trading in their old devices. There's a lot of value in your old device, even if it's 4 or 5 years old. And I think you can bring that back into market. You can get value for that and use that to offset some of the price. So I think, actually now has never been a better time to upgrade to a new phone.
Briefly, James, any concerns about what's going on in the Red Sea at the moment in terms of shipping new devices across to Europe?
Well, we use a lot of air freight, and we use all sorts of freight solutions. So no, at the moment, in terms of supply chains from the mobile perspective, we don't see any impacts. We're keeping a very close eye on that, of course, and we're concerned about all those developments in the Middle East. But right now, no, we're set fair. We've got great supply of the S24, and from a chipset point of view as well, of course, we manufacture an awful lot of our own chips. We work with Qualcomm and others, so we have a balanced supply chain when it comes to chipset. But we're really excited about what we're bringing to market, and we look forward to many customers using it and feeding back to us.
All right, James, got to leave it there. Appreciate you joining me today. Thank you. Some other business news stories for you now. And Britain's biggest high street lenders expect the sharpest rise in defaults on unsecured lending, such as credit cards, since 2009. That's according to the Bank of England's quarterly credit conditions survey published today, which also reveals that lenders saw an increase in defaults on secured loans, such as mortgages, during the final 3 months of last year. Default rates on secured loans are expected to rise during the first 3 months of this year. Lenders expect default rates to increase slightly for small and medium-sized businesses during the period, but remain unchanged for large businesses. Sainsbury's said today it's to gradually withdraw from offering banking services after more than 25 years. It follows a decision by the UK's second-largest supermarket to concentrate on its core retail businesses. It said financial services products it continued to offer in the future would be provided by dedicated financial services providers through a distributed model, as it currently does with insurance. Well, Sainsbury's Bank launched in February 1997, initially as a joint venture with Bank of Scotland, before Sainsbury's took full control in 2014. And the social media platform Reddit is reportedly preparing to float on the stock market in March. Reuters says Reddit, famous for discussion groups and in particular those at the centre of the meme stock trading crazes over the last 3 years, is looking to sell about 10% of its shares in the IPO. The business is currently owned by a group of investors led by Advanced Publications, the parent of magazine publisher Condé Nast, which also includes the venture capital firms Andreessen Horowitz and Sequoia, as well as Tencent, the Chinese internet giant. Now, the Financial Conduct Authority, the UK's financial regulator, is looking at how investment banks and commercial insurers deal with allegations of sexual harassment, bullying and other non-financial misconduct. The revelation from Sarah Pritchard, the FCA's Executive Director for Markets and International, came yesterday in the latest of the Treasury Select Committee's so-called Sexism in the City hearings. The regulator is expecting businesses to provide data on how many complaints of non-financial misconduct they've received and how they will resolve those complaints. Well, Lynn Dunn is head of the EMEA Contentious Financial Services Group at the global law firm Ashurst. Lynn, welcome to you. What are financial services firms currently expected to disclose?
Well, they're meant to disclose any sort of behaviour which they think is relevant to the regulator. So obviously, at one end of the scale, if you've got someone who's committed dishonesty or a police offence, then you would do that. But the problem is the scale is so large as to what people may have done, and the current guidance is unclear as to whether that is something which should be disclosed to the regulator. So what we're seeing from yesterday is the regulator using its powers, which it announced last year, actually, that it would do, in order to try and get and garner a whole lot of information in order that one can see that they can then decide what to do next.
This is quite a meaningful change then, is it, in your opinion?
I think it's a very good use of their powers in order to get the information so that they can work out what to do, because the issue at the moment is it's entirely clear from their perspective, and indeed in the industry as well, as to how widespread is this kind of misconduct. How are different firms treating it? So, for example, how do they go about detecting it? How do they investigate it? How do they assess it? At what level are they reporting it to the regulator? And so what we expect to see is when these information requests go out to these institutions, and as you said, the wholesale banks and the insurers, that will then give the FCA a whole wealth of information it doesn't have to date. And we would then expect to see it obviously take that forward and decide what needs to be done next.
Do you think, or do you expect the FCA to publish some of this data? I mean, not naming individual firms, obviously, but do you think they'll provide aggregate details?
Yeah, we would very much expect to see that, whether relevant to this in isolation or also in their annual report, which obviously is public document.
That's going to shock people. Do you think the levels of this sort of misconduct are higher than is being acknowledged publicly?
I think it's very difficult to say that for the reasons that I set out, in that we don't have visibility over the whole sector as to how much of an issue this might be. And also different firms take different views and have different tolerance levels as to what constitutes non-financial misconduct. Because it's very wide and encompassing. So there's sexual harassment, there's bullying, there's discrimination, there's threatening behaviour, oppressive behaviour, and how one firm categorises that could be very, very different to another. So what we expect to see is that the FCA will be able to take this information and then use it to draw themes out across the industry.
It's really, I mean, you've put your finger on a really crucial point there. It's very, very difficult to sort of come up with a kind of one-size-fits-all code of conduct here, isn't it?
Yes, exactly. And to date, that's why it's very much been left to the firms to take that forward. And what's emerged for those people grappling with it in the industry is what is the standard that is expected? What should they be reporting? When should they be reporting at what stage? And so it's a big job for the FCA to undertake to come out with a code, if that's what they do, because of course they can come out with guidance, they can make speeches. There's lots of other ways they can encourage the industry to behave. And do we know
who the FCA is going to be talking to at individual firms to get this sort of information? Will it be compliance departments? Will it be HR? A mixture of the two?
Yeah, so usually you would expect the survey will go into the firm, and then ultimately it would usually end up in the compliance department, but would seek to draw in lots of different individuals within the banks, and that will obviously depend on the size of the bank or the insurer. Quite a lot of them have dedicated regulatory teams who would then take the lead on replying to this. But what we've seen overnight since the announcement yesterday is firms already beginning to start grappling with what data is it they're anticipating this request will be, so that they can start beginning to get it together, because the nature of it is such it may not be necessarily easily accessible to them. And what was made clear yesterday is there's going to be a very short timetable in order for the firms to provide this data.
Doubtless we'll get a bit of grousing by some businesses that this is more red tape for them to deal with. But I mean, do you think this is going to reduce the levels of misconduct and harassment and bullying that we see in the city?
I think the initial reporting, garnering of information won't necessarily have an impact. What will have an impact is any change in guidance or rules which follows that. There is already afoot from the FCA a diversity and inclusion consultation paper, which has within it contained that non-financial misconduct should actually now be made to be part of an assessment of the fitness and proprietary rules for individuals. And if that is to take place, then that would have a significant change on people's behaviours.
Well, let's hope so. Lynn, great to talk to you this afternoon. Really appreciate your time. Thank you.
Thank you.
Still to come here on Business Live, we'll have a look at how the markets have finished up this Thursday afternoon. Stay with us. The pound has rallied, moderation, interest rates peaking.
Up at 6%.
The highest for 14 years.
Will that be the peak? Will it be a little bit lower?
It's closer to a potential crash.
So many words, so many meanings. But what do they mean for you and your finances? Stay up to date on Sky News.
I'm Adam Parsons. I'm Sky's Europe correspondent based here in Brussels. Cobblers have been pulled up out and are being used as missiles to hurl at these police. Made by people who dare to challenge. Nice to see you again, Mr. Barnier. Why? Meeting you. Fishing does have the potential to stymie an enormous economic deal. We take you to the heart of stories that shape our world. What strikes you when you come to this glacier is not just the way in which the environment is changing, but the speed at which those changes are happening.
It's like yemiyoruz. It's like better. Fly Emirates. Fly better.
Thank you.
Well, European stocks have traded to the upside all day following a number of positive earnings updates. Here's the picture from continental Europe, all the main indices finishing in positive territory. Among those updating today who went down quite well, Swiss luxury group Richemont has finished up 11% in Zurich, the owner of Cartier and Montblanc reporting a recovery in quarterly sales. Well, here in London, the FTSE has finished up, but not quite as much as its continental peers, up a sixth of 1%. Gains for consumer stocks have been balanced out by declines in healthcare and energy stocks. The leading blue chip gainer in percentage terms is Flutter Entertainment, the owner of Paddy Power and Betfair. The shares have shot up by 16% on a trading update. The Ladbrokes and Corals owner Entain is up 5.5% in sympathy. To the downside, the insurer Admiral is off 2.25%, just about, on broker comment. Outside the FTSE 100, well, crikey, Watches of Switzerland, what a hammering that stock's had today. Off by 36% after warning that full-year sales will come in below expectations. Another mid-cap faller to mention is the North Sea oil producer Harbour Energy. That's finished off 8.75% after it cut its production forecast for the year. To the upside, Currys, whose chief executive was on our programme this morning, has jumped by 10% after its Christmas trading update revealed that full-year profits will be better than expected. Over on Wall Street, all of the main stock indices have opened to the upside, with chip stocks leading the way, following a very confident trading update from the Taiwanese-based TSMC, the world's biggest chip maker. To the downside, though, Birkenstock has finished off nearly 9%. Well, it's still trading. It's off 9% right now. That's after the upmarket footwear group warned earnings could come under pressure this year. Over on the foreign exchange markets, well, it's been a pretty dull day, to be honest. Sterling more or less unchanged against the dollar, up about 0.25% against the euro. Single currency off just over 1/6 of 1% against the greenback. As for the oil price, well, that has continued to trade in the very narrow range that it's done for most of the last week or so. Barrel of Brent crude currently changing hands at $78.71 a barrel. That's up a little over 1%. Well, with me now is the head of market analysis at RBC Brewin Dolphin, Janet Mui. Janet, great to see you. Let's talk chips. I mean, great rally on Wall Street, but it was all kicked off by TSMC.
Yeah, Ian, thanks for having me. When you have the bellwether of the chip-making industry reporting good results and actually guiding a healthy revenue growth for this year, I think that's very encouraging. And we actually already saw that the chip the revenue in the sector has stopped falling. The stocks have been actually year on year starting to pick up, so that's great news. So I think this further provide evidence that there is this recovery that is happening. And particularly, I think there are two drivers. One is the cyclical. So there has been destocking going on for pretty much the past 1 to 2 years. And now we're starting to see that cyclical uplift. We heard from Samsung earlier in your program that they're enrolling the new smartphone with AI features. So for the secular headwind, we have artificial intelligence, which TSMC will be a big beneficiary of that. And similarly for other chip-making companies that is leveraging on AI.
Yeah, because all of these AI-enabled devices require more powerful processors. So boom time for TSMC.
Yeah, exactly, because you're talking about very sophisticated chips here. So TSMC, its major driver used to be smartphone chips, which is provider for Apple chips, of course. But now we have the structural tower, which is AI chips, which you need more computing power, as you mentioned, because a lot is about processing a large amount of data, graphics, etc. So this is really going to be a strong structural tailwind for the industry as a whole.
Now, the big news in the US this afternoon has been the jobless claims. I mean, it just shows the strength of the US economy, doesn't it?
Yeah, I think the job data come in stronger than expected again and again, because we already saw the official job creation still over 200,000 per month. And now we got the jobless claims, which is now 180,000, which is the lowest since September 2022. So that's actually still very resilient after so many rate hikes we have seen. So I think markets are now kind of trimming the expectation of the number of rate cuts we are going to see in 2024. They're still expecting a lot, still expecting more than 5, but it has trimmed from over 6 rate cuts to about 5. So I think this ongoing digestion of the data will happen, and I think we can expect choppy trading sessions in the near term.
OK, Janet, got to leave it there. Great to see you here this afternoon. Thank you. That's it from me. I'm back again at 11:30 tomorrow morning with the next edition of Business Live. Hope to see you then. In the meantime, do stay tuned. Coming up after this short break is the News Hour with Jonathan Samuels. Cheerio. Brilliant, well done.